Today, I'm going to talk about tariffs, how the tariffs are creating a perfect storm for the housing market. Per the Housing Wire website, the headline is Tariffs are creating a perfect storm for the housing market. So let's dive deeper. The first paragraph says, over the past month, home sales have definitely picked up. Right now, we are at the peak of the spring housing market season. A lot of activities typically happens every single spring of every year. Compared to last year's very low level of home sales, we have seen pending home sales counts at above the year ago levels for 4 weeks in a row. Furthermore, unfortunately, we have a huge spike in mortgage rates as the chaos of tariffs, royal markets, another buzzword, royal, ROILED. And according to Mortgage News Daily, at the moment of this recording, April 23rd, the mortgage rate is around 7%. It's very elevated. As a result, the situation is making the U.S. debt less, which drives up borrowing costs for Americans, as if this is all we need. So the question is, will this little bit of market momentum be able to hold up? We'll see. So once we back off the tariffs, then interest rates could come back down. So we don't know. See, no one knows when we could come back off the tariff because of tariff policies are unclear and unstable. So if these conditions do continue, home sales are going to slow down quickly and home prices are likely to get hit too. Again, based on the elevated mortgage rate around 7% at this moment, and if this rate stay elevated, once the spring buying season is over, for the rest of this year, we can see things are going to trend downward. So again, we are at the peak home buying season. So the timing of the shift is critical. Unsold inventory of homes in the market has been rising for years and is already at the highest level since 2019, since the pre-pandemic. A new variable this spring is that there are also more sellers coming to the market each week than we have been for the past 5 years during the pandemic. The tariffs are really in danger of creating the perfect storm for housing market chaos. What does it mean, perfect storm for market housing chaos? Perfect storm, in my view, as I continue with my presentation, is to create hopefully a housing market before the pandemic, 2019 and prior. So we have a balanced, healthy market of 4 to 6 months supply of inventory. So instead of going through, especially in the last couple of years, with the volatility of the mortgage rate and with the inflation, with all this chaos now, President Trump has added the tariff situation. And of course, there's also a recession, global financial crisis and all that. So it's so to say the least, it's very confusing, and people are consumers out there are very confused. They don't know what to do. They are paralyzed with fear. So it's just a very interesting market dynamics, to say the least, what's going on right now. The storm, the housing market storm, the chaos is not hitting the whole country evenly. As we all know, real estate is local. It's no such thing as a national housing market. So in some local markets in the country, we're seeing a pretty robust housing transactions where the demand has way exceeded supply. And like in the Northeast, right, in the South and Southeast, in the pandemic boomtown, we have seen a slowdown. We have seen a very excess inventory relative to demand in the South and Southeast, and in the what you call it, the Sun Belt. It's going through some slight correction, especially in parts of Texas and Florida and a few other Sun Belt locations, which I will go over briefly later on during this presentation. This graph shows the home sales creep above last year. As you can see, the pink line, 2025, we are seeing this past week 72,000 sales. So it's higher than 2024. So the weekly pending home sales, U.S. single family homes, according to Alto's research. So that's a good sign. New listings nationally, there are more sellers each week than we have seen in the past 6 years. So a lot of people are tired of sitting in the homes, even though many of them have very historical low mortgage rate. We have talked about that on my previous videos, but a lot of sellers, they want to move on with their lives, even with a low mortgage rate. People still need to do something. There are always a handful of sellers, they want to sell for various reasons. They have a job relocation, a larger family size, and a lot of different reasons which will cause some families to sell their homes and move on with their lives. So let's continue. Weekly sales count continue to grow. As you can see right here, 2025 on this pink line, it is continuing to go up. So as a result, the gray line, see the gray line or years past, the gray lines at the top of the chart, right here, are from the year 2017, 18, 19. All this gray line right here, so that was the pre-pandemic. Now, the number of new listings each week is finally going back to the normal. So if you follow the Housing Wire Alto's data each week, you know that the Sun Belt states, like I said before, have a lot more sellers, and the Northeast is still have very few new listings each week. In terms of inventory, there are now 702,000 unsold single-family homes on the market. That's 33% more than a year ago. That kind of sounds a lot. You're thinking, wow, there's a tremendous spike in inventory. 33%, 1/3 of inventory, higher than 2024. One would think, wow, there's so much inventory or coming to the market, we can have tremendous excess of supply and not enough demand, and that's going to crash the market. We have to be out that because we don't want to overthinking, because even with the 33% hike and more inventory from last year, we still are below the pre-pandemic. You have to take it at context because we are working from a very low bar in terms of inventory during the pandemic, or and post-pandemic for that matter. So let's continue. So available inventory of homes in the past 10 years, as a matter of fact, in terms of single family inventory. So as you can see, during the before the pandemic, back in January 2019, we have like 1 million homes for sale, single family home sales. Then when the pandemic hit and the mortgage rate came down, plunging into a historical low rate, 43%. As you can see, the demand just totally went up because of affordability. So you can see, so there was so much transaction going on during the pandemic, 2020, 2021, and part of 2022. You see the lack of supply of inventory and tremendous amount of demand during the pandemic housing boom. When the boom is over, back in the middle of 2022, when the mortgage rate doubled from around 4 to 5% into 7 to 8%, as you can see, the inventory spike because of demand has drastically subsided because of the spike in the mortgage rate in the latter part of 2022. That was right here. Then, ever since the second half of 2022, when the mortgage rate is hovering around 7 to 8%, we have seen a lot of volatility in terms of everything, really, in terms of inventory. Inventory has spiked up quite consistently in the past 24 months. And then last year, 2024, when the mortgage rate was 7.5%, we have a tremendous amount of inventory as well. Now the mortgage rate has decreased all the way down to 6.6% last month, back in February. We have less inventory. Now the mortgage rate has increased again, back to 7%. Now that we have more inventory. To say that we live in a very volatile mortgage rate world is pretty much a understatement. So at that time, a few years ago, there were 850 homes on the market, but now there are 700,000. So most of the unsold inventory now are in the Sun Belt, Florida, Texas, Arizona, Georgia, and Colorado, because during the housing boom, home builders and they are building so much homes to take in the elevated demand back in the pandemic, during the pandemic. Now things have completely changed. However, in the Midwest and Northeast, there were not that much housing construction going on during the pandemic boom. As a result, because of the lock-in effect, most homeowners are locked into their homes because they don't want to, they have a historical low mortgage, around 3 to 4%, and they're not going to move. They're sitting on their gold mine, which is their low mortgage rate. So they're not going to turn over. They're not going to sell their house at 3%, buy a new house for 7 or 8%, essentially doubling, at least doubling the mortgage payments. So it's a lock-in effect. And so again, so in the Northeast sector of the country, there were little to no new construction. And now because of the lack of supply in the Northeast, homes are doing very well in that sector of the country. Whereas there's so many, the pandemic boom migration that has occurred in the Sun Belt during the pandemic, and the builders went crazy. They overbuilt. Now they have excess inventory of homes in the South and Southeast and in the Sun Belt areas. All right, so that's what's happening. So by the end of we believe by the end of 2025, we'll be back to an old normal level of homes on the market. So the pandemic shortage will finally be over. Is that what you think? Please comment below share with me what do you think. So let's go over the home prices. Does the economic and financial market turmoil that we have seen recently will create conditions where home prices shift negatively? That's a good question. What do you think? Please comment below. Home prices are up just a fraction over last year. As you can see, this pink graph shows the current home prices almost like 400,000. So it's higher than last year and higher the past 4 years. So given all this market volatility, we're still seeing more demand than supply. According to Redfin, the month of supply of inventory nationwide is right now like at 4 months. Just as a reminder, a balanced market, a healthy market where demand equals supply is around 4 to 6 months. So nationwide, according to Redfin, as of right now, we are at 4 months. So we're still somewhat of a seller's market. This means there are more buyers than sellers, just slightly more. But in certain markets like Florida and Texas, we have a buyer's market where the month supply of inventory is at 6, 7, 8%, 8 months, 6, 7, 8 months supply of inventory, especially in certain parts of Florida, like the southeastern portion of Florida and along the Atlantic coast as well of Florida, and parts of Texas as well, Austin, to name certain cities that have an oversupply of inventory, sitting at more than 4 months of supply. So it's a buyer's market in certain areas, but for the most part, nationwide, we still at the cusp of the still somewhat of seller's market. So things may change at any given moment based on the trade, based on the tariffs, based on the economy, inflation, and all the crisis that's going on that's hitting the national headlines almost every single day. It's certainly very challenging. I have never seen in my 20 years more than 20 years as a real estate investor, I've never seen this amount of volatility. Let me digress just a little bit. As a real estate investor, I'm not a realtor. My goal is to buy and hold forever. My investment properties just continue to stay the course. I'm not going to panic. I'm not going to do anything. I'm getting rents. I'm getting the cash flow from my tenants. So I'm investing for long term. I don't care about the short-term volatility. So if you are a real estate investor, if you are long-term buy and hold real estate investors, you need to show discipline, show consistency, and do not be bothered by all this short-term volatility, because real estate will overcome all this volatility. Just invest for the long term and you'll be fine. That's my core belief. The home prices are not expected to accelerate that much, but it's very resilient. And there's still a national home shortage. Some people say that we're anywhere from 3 to 8 million homes short. Shortage is a home shortage. So some may argue, many experts state that the housing shortage will continue to be with us for at least a decade. And I believe that. I believe that we still have a housing shortage, regardless of all the negativity you hear out there, especially the housing bros, the doomers out there that's always preaching a housing crash. We are not seeing a housing crash, not according to all the vast data that I've been monitoring over the past few years. It's not going to be like 2008. Home prices have not gone negative, at least not just yet. The data are very factual. It is what it is. You cannot dispute that. However, but then again, the consumer confidence lagging. If consumers will start buying homes and demand or decreasing because of the elevated mortgage rate, if the mortgage rate goes anywhere above 7%, watch out. The demand going to take a hit, and then could see less transactions, and home prices may go through some slight corrections even longer. So let's go with the price reductions. Price reductions have not been accelerating, even though we are at 35% of the homes on the market have taken a price cut, which is the highest in the past 10 years. During the April timeframe, price cut is an indication of the demand. If the price cut is going to be more than 35%, as we have seen current month right now, at the latter part of April 2025, if we're going to see less demand out there in the foreseeable future, then the price cut will be above at 35% level. Now, the price cut is higher than in the past 4 to 5 years. As you can see, the mortgage rate jumped back to 7.5% or something like that. Then you're going to see a continual higher percentage of price cuts. So the price reduction shift was a clear leading indicator for future home sales and sales prices. So we have to monitor the inventory. We have to monitor right now at 35% sales price cut, which is very elevated, as I stated. And if this price cut continue to increase, that determines that the demand are decreasing. So it may affect the home prices for the rest of this year and beyond. So again, to recap, we're seeing a perfect storm. The perfect storm is the uncertainty of the tariffs and how it's going to affect the economy and the housing market. And also the mortgage rates, volatility, and the tariffs. And it's just a lot of events that are really we're experiencing, which is very paralyzing. But so this is what's happening. But at the same time, I feel we're moving closer to a healthy market, to a balanced market. So bad, right? As we conclude this, if you have any questions or anything like this, please comment below. And other than that, if you receive any value whatsoever from this video, please like and subscribe to my YouTube channel. I provide weekly updates on the general and economic conditions, the real estate market, and I also provide real estate investment information. I help people buy properties. If you want to put your email, place your email on my website, become a free member of our real estate investment community, the Year Real Estate Network. So when you sign up with your email, you can receive free information about real estate investing information, about buying turnkey income property in different locations in the U.S. So you can become a successful real estate investor ultimately. Thank you so much for watching, and I will see you on the next video. Have a nice day. Bye-bye.